Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of January 15th. So one of our primary 2024 investment themes is that the economy cools into a soft landing. What this means is that the Fed has raised interest rates to slow inflation, but the Fed is able to avoid pushing us into a recession. That's a classic soft landing. So therefore, in 2024, we do not expect a recession. However, if we do have a recession, we believe it will be very mild and be a sort of so-called sector recession. A sector recession is not a steep one where everything falls. Like think of 2008 where everything went down, but a recession that goes sector by sector through the economy. Think about this. For example, today in recession, there's manufacturing is in recession, so is housing, so is our auto sales. One area not in a recession is the consumer, as evidenced, for example, by robust consumer spending. So with areas in recession today starting to improve, for example, housing with building permits increasing, auto sales, you're seeing sales pick up, though still below pre-COVID levels, and manufacturing, which has been down for 14 straight months, is now starting to stabilize. What about the consumer? Clearly, the consumer is going to be impacted by higher borrowing costs. Higher borrowing costs leads to higher credit card interest rates, for example. In case in point, the consumer is being affected. As you see here, we've seen a surge in credit card debt. Again, the consumer is being impacted. Also, as you see on this next chart, it's clear that the high savings levels are declining, which will likely hurt consumer spending. So with this as a backdrop, this week we get two key data points on the health of the consumer. And these reports will help us understand, is the consumer falling into recession? Wednesday, we get December retail sales. Expect overall retail sales, according to the consensus, to rise from 0.3% to 0.4%. Also, the consensus expects core retail sales, excluding autos, to be flat month over month. We expect sales to be a little bit stronger than expected. Part of the reason is the fact that the stock market was strong at the end of last year, which should help drive retail sales. On Friday, we get the University of Michigan Consumer Sentiment Survey. Expect a slight drop according to the consensus from 69.7 to 69.1. We think consumer sentiment will be much better than expected. Mortgage rates are coming down, the job market is strong, gas prices are lower, and inflation continues to slow down. So this week, the overall takeaway is that if our soft landing or worst case sector recession scenario pans out this year, the consumer is likely the next to drop. This week, we get two key readings on the consumer. Consumers will likely see some slowing eventually, but in our opinion, it's not going to be that bad. One key reason, the labor market remains very strong. For example, as you see here, there are 1.5 jobs available for everyone looking for a job. A strong labor market is the key to the consumer. Thank you for listening. For more information, please follow us on Twitter at CeteraIM, and see you next week, and thank you.